In today's video, I'll be talking about an investment strategy which is known as DCA, which means dollar cost averaging, which basically means that rather than waiting for a market correction or uh, trying to do some sort of technical analysis to find a good entry point, you keep investing on a regular period, whether weekly or monthly, and you decide to invest a fixed dollar amount, and depending on whether the asset where you're investing it's at a higher price or a lower price, you will get a different amount of money. So for example, if I invest $100 and for a coin which is worth $100, I'll get one coin. But if suppose in the future it corrects to $50, I'll get two coins at the same amount of investment. But as I progress, depending on the market movement, I'll get a different amount. But the followers of this strategy maintain that if you use this strategy for a long period of time, say several years, it always outperforms any other kind of technical analysis where you try to time the market. I always was a bit skeptic about it because I always thought that, people do so much analysis and it makes logical sense if you can identify a market correction where all the assets are available at a discount and you can get a good entry point. And then when the market appreciates and you sell them for a decent profit, it makes perfect sense for getting a profit on your investment. And I was also always a follower of Warren Buffett's philosophy that uh, be fearful when everyone's greedy and be greedy when everyone's fearful. So basically, when you see that market's in a boom and everybody's talking about how great the market's performing, how good a future it has, and that time you should be very concerned, and that time you should try to book your profits or at least not make any new investments. And when you see that there's total blood on the markets, everything is crashing, everybody's getting worried, everything is selling off their assets, that's the time you should uh, decide to start investing in the assets which you are confident of holding for a long time. And but looking at the current market situation, I see very erratic behavior because on one hand, because of the pandemic situation, most of the economic indicators are quite bad. People are struggling to keep their businesses afloat. So many people have lost their jobs. People are finding it difficult to get money, whether it's through real estate or jobs or businesses. But at the same time, the stock markets all over the world are doing very well. They are at all-time high, and even the cryptocurrencies, most of the popular ones are have reached new all-time highs. So I thought rather than waiting for the correction, which I normally do, I thought this is a good opportunity to try and do an experiment to see if this dollar cost averaging strategy actually works. So the first decision I had to take was which currency to select because I've always maintained Bitcoin and Ethereum as the biggest components in my portfolio. But looking at the current situation, Bitcoin has already reached a limit which is more than double of its previous all-time high, which was about 20,000 in early 2018, and it's currently trading at well over 40,000. And similarly, Ethereum, which had reached a all-time high of around 1,400 in the last bull run, is already trading at around 1,800. So I thought I'll select a popular coin, maybe not a very small coin, but a coin which has not appreciated too much. Because if I look at the top coins, most of them are already at their all-time high, and some of them are very new. Because, for example, I'm very bullish on Polkadot as well, but compared to the other coins, it's relatively quite new. So I decided to select Monero because Monero is a coin I am very confident that it'll do very well in the long term, and I don't mind holding it for a period of say 4 or 5 years or even longer. And when I look at the price chart, it's currently at its 1 year high because if we look at the last 1 year's time frame, it has been trading between around 40-50 levels 2 currently it is close to 180. But if we look at the entire time frame, it's still very far from its all-time high, which it did in the last bull run where it reached around $540. And so I decided to go with the approach where I'll start investing $100 every month, starting this month in February 2021. And I'll use two approaches. Currently, I have two wallets which support Monero. One is Exodus and one is Atomic. So I'll use Exodus for the dollar cost averaging. So irrespective of how the market's performing, I'll keep purchasing $100 worth of Monero and keep storing it in my Exodus wallet. And I'll be using the timing strategy for buying and storing Monero in my Atomic wallet. So whenever I feel that there has been a market correction or the markets have fallen suddenly, it's a good price level to enter. That time I'll buy Atomic. That time I'll buy Monero to store in Atomic, and Exodus I'll just keep regularly buy $100 worth of Monero every month. So in for the timing section of this experiment, I'll keep the same budget. So because $100 per month works out to about $1,200 every year. So I'll keep the same budget. So in the timing analysis, for example, in February, I see that Monero is currently at a 1 year high. So I'm not going to buy it maybe this month. So next year, if I decide to buy, I can buy if I see a good market correction, I'll probably buy $200 worth of Monero. But what I'll make sure is that during the entire year, I'll put about $1,200 into Monero using this strategy. So if for some reason I see that the market keeps on going increasing, by January, I'll pick a point and I'll buy about 1,200. So both the sides are equal in investment. And at end of this 1 year period, I plan to do an assessment of finally which strategy makes sense, whether I was correct in using the technical analysis and timing approach, which I have been using till now, or I would have to see that, the dollar cost averaging method actually has its merit and it's worth considering, especially when you're dealing with a very new kind of market like the cryptocurrencies, where people don't have a lot of historical data to build their analysis upon. So I'll keep updating this experiment on a monthly basis so we can see how this progresses. And currently, how I view the markets for the coming month is that, like I mentioned, that the markets have already reached new all-time highs and people are very bullish. I get a sense that we might expect a correction very soon. So my prediction for March would be that we might see some sort of correction, but let's see. Let's see how the next month shapes up. And just to show you my wallets, this is Exodus, where you see about more than one Monero. This is because before I start this experiment, I had already been trying and testing the wallet. So I had about zero point 0.4 Monero already. So, and plus when I added the zero point 0.6 Monero, which I bought with the $100 yesterday, now it's a little more than one. And similarly, in my Atomic wallet, you see the same starting amount of about zero point 0.4, which I had stored previously to check the wallet. So when I see a market correction and buy some more Monero, I'll be using this Atomic wallet to store it. So that's all for today, and I'll keep you posted about how my experiment proceeds. Thank you for your time.